capitalist powers, really, because the capitalists themselves, in a way, couldn't believe that the crisis was postponed for so long. And I know some economists used to question us and say, you said, well, the bubble's going to burst, but when is it going to burst? And then there's another year, another year, another year. But it was actually on the basis of this phenomenal expansion of credit that came to an end in 2007, 2008. Now, there are lots of capitalist commentators now, particularly journalists in the serious financial press, who blame Greenspan and the central bankers, and they say, well, it was irresponsible. They allowed a bubble in asset prices, particularly housing in the recent period, but also in shares and commodities, whatever could be speculated on global markets. But and they also, they allowed interest rates to remain far too long, so money was dirt cheap, particularly for the big financial institutions, and they also allowed, as I mentioned, a very loose money supply. So any of these big corporations could get massive amounts of money to speculate across the world in whatever it was they wanted to speculate in. We also know that consumers could speculate because that was linked to the so-called subprime housing boom, which existed in Britain in many ways, as well as in the United States, in Spain, in Ireland and so on, and where banks or building societies persuaded people or promoted the idea that almost anyone could buy a house regardless of their income and their real ability to pay. And there was the phenomena of every week almost you get a letter from some other bank offering you another credit card on not necessarily favourable terms, but easy to obtain, if you like, but maybe hard to get out on once you run up debts on it. Now, this has been blamed for the crisis, but from a Marxist point of view, this is only a superficial explanation, because you have to say, well, where does the money come from? Now, I know some people think, well, banks or whoever central banks can print money at will. Now, if they simply did that, it would obviously be highly inflationary under most circumstances. So you've got to identify some real source of this money. It can't be simply, the idea that the central bank unleashes the sluice gates and it all comes pouring out, and that solves the problem. Because on that basis, capitalism could go on forever. What would be the problem? You just print more and more money. Now, on the point 8 in the handout, it gives a brief summary of the sources of the cheap credit. Now, obviously, we start from the position that loose money facilitated by the central banks was the facilitating process, if you like. That had to happen. If they'd have adopted a more tight position with higher interest rates and tighter money, although it's questionable how they could have enforced it, but they could have restricted it more than they did. Now, the actual real sources, if you like, are given as excess. One of them is excess corporate profits. Now, you might think, well, what are excess corporate profits? That maybe all corporate profits are excess. But what I actually mean by that is that they're excess profits in the extent that they raised their level of profitability, which happened across the world for a period in the 1980s, and then again in the 1990s, and then again in the early part of this century, by intensifying the exploitation of workers through cutbacks, casualisation of labour, intensification of the labour process and so on. But on the other hand, their capital investment, their investment in new means of production, is actually being historically on a very low level. And it's roughly speaking, in the 90s, it was only running at half the level that it ran in the 1960s, even though you had the industrialization of areas like China, of other underdeveloped or semi-developed countries and so on. So even in spite of what looks like phenomenal investment in some sectors of the world economy, capital investment, and that means new investment minus the worn-out capital, so it's net capital accumulation, has been only half the rate of the period of the post-war upswing. So where has the extra profit gone? And the answer is it's gone into financial speculation. It hasn't gone into developing the means of production, or building houses or socially useful infrastructure in the last period. But there are some other reserve sources. One is the foreign exchange reserves of countries like China, which has a big export, and has for a long time had a big export surplus, so that translates into an accumulation of foreign currency reserves. The same applies to many of the oil producers. Japan has been overtaken by China now as a surplus country, but they accumulated huge surpluses. Now those are huge piles of money that weren't imported into the Chinese or the Japanese economy, because that, again, they had limited internal domestic growth. To simply import the money into yen or RMB, etc. in China would have been inflationary by itself. So they kept the money in their cash accounts, and by and large they kept it. In the case of China, they bought up US Treasury bonds, so they're actually financing the trade deficit of the US, the federal government deficit, and also a lot of private debt as well. And the same applies to the oil producers. So that's a very contradictory relationship, where it's really the capital flows that determine the trade relations, and not the other way around. And then there's another source, which is the savings of people particularly in many of the Asian countries, and that's because the level of social provision is low. It has been low historically, so people save more than in the West for their retirement, for health, for education and so on, because there's very limited or very little state provision. Now those savings are, in many cases, the classic case was Japan, for instance. They were deposited in the post office savings bank. The people were paid really a low rate of interest. The post office lent it to investment banks or other big international banks. They lent it to speculators on the world arena at what amounted to very low interest rates. So that was another source of huge liquidity into the world, into the world economy. And it represents, if you like, debt finance consumption in countries of Europe, the US and so on, and on the other hand, high levels of growth of production in countries like China, but on the basis of very low domestic living standards and